All right, if you're a data engineer, the term ETL is probably second nature to you. But what about the ultimate ETL challenge? Today, we're going to dive into the world of global finance, and we're going to see how massive companies wrangle data from all over the planet into a single, reliable number. We're talking about financial consolidation, and we're breaking it down in a way that makes sense for data people.
I mean, just think about it for a second. For any big global company, this is a massive data challenge. You've got subsidiaries all over the world, each with its own ledger, its own currency, and probably its own completely different way of tracking things. How do you even begin to make sense of all that chaos?
And that's exactly what this is. At its very core, financial consolidation is the ultimate ETL challenge. It's all about creating that one single source of truth from a whole bunch of really messy inputs. So, okay, let's dive in and see how this complex data pipeline actually works.
We'll start with that global data challenge. Then we'll peek inside the FCCS data model. After that, we'll tackle the really tricky problems, like currency mismatches and these things called intercompany eliminations. And finally, we'll see how it all comes together. By the end, you'll see how this system automates away some of the messiest data problems you can possibly imagine.
Okay, first up, the global data challenge. This is our extract phase in the ETL process. We are dealing with a torrent of data from all these different systems in different formats, and we somehow have to funnel it all into one place just to begin making sense of it. So you can think of Oracle's FCCS as this highly specialized, pre-built data processing engine. It was designed for one job and one job only, to take in all that raw financial data and start applying a whole series of rules to clean it up and standardize it.
So how does this engine actually structure all that data it's pulling in? Well, it's not just some giant flat table. Instead, it uses a really powerful multi-dimensional model, which, for our purposes, you can basically think of as the schema for this financial data warehouse.
For any data engineer, the absolute easiest way to think about dimensions is to think of them like the keys in a star schema. They're the things that define what a number actually means. Is this number sales revenue, or is it an office expense? Is it for January, or is it for the entire year?
Now, all of these dimensions combine to create this highly structured data cube. It's kind of like a coordinate system where every single financial number has a precise, unique location. And this rigid structure, this is the secret sauce. It's what makes all the powerful, automated transformations we're about to get into even possible.
All right, now for our first big transform, currency translation. And believe me, this is a huge headache. Imagine your German subsidiary reports a profit of, say, 10 million euros. Well, you need to convert that into US dollars for the parent company's books. But what exchange rate do you use? The rate today? The average for the month? Every single choice you make creates a small difference, and when you're dealing with billions of dollars, those small differences add up fast.
And here's the thing, these aren't errors, they're just mathematical realities. But a fundamental rule of accounting is that assets must equal liabilities plus equity. That equation has to balance, period. And these tiny conversion differences can throw the whole thing out of whack. So where does that difference go?
Well, FCCS doesn't just ignore it or throw an error, it isolates it. The CTA account is basically a system-generated bucket that's designed to hold all the noise created by these currency fluctuations. From a data perspective, it's like a ledger just for rounding errors, and that ensures perfect data integrity.
Okay, if you thought currency was tricky, get ready for the next transformation, because this one can get even more complex. We're talking about eliminating transactions that happen between a company's own subsidiaries.
So imagine subsidiary A sold some goods to subsidiary B. From the parent company's point of view, you can't owe money to yourself, right? It just doesn't make sense. That entire transaction needs to be nullified or eliminated. It's just internal noise that has to be filtered out of the final report.
And this happens all the time. Subsidiary A records the sale in January for $100. But subsidiary B is over in Europe, so they book it in euros. And maybe their accounting team doesn't even get around to entering it until February. So now the numbers don't match. What does the system do? Does the whole ETL job just crash and burn?
Nope. And this is where the system gets really, really smart. Instead of crashing the whole process, FCCS automatically just parks the difference in a special plug account. For a data engineer, you can think of this as a built-in reconciliation table or maybe an automated error log. It captures the discrepancy without halting the entire pipeline. It's super clever.
So let's trace the data right here. You can see the system nets out what it can. It reverses the receivable and the payable. But that $2 difference, it doesn't just vanish into thin air. It gets automatically posted right into the plug account. This means nothing gets lost. Every single dollar is tracked and transparent, which gives the finance team a crystal clear audit trail.
So, after all of that transforming and cleaning, we finally arrive at the final output, a clean, consolidated financial statement. This is our load phase, where all that clean data is finally made available for reporting and analysis.
So you go from dozens of messy sources, and the FCS engine produces this single auditable set of books. But why does this matter to you, the data engineer?
Okay, so here's the bottom line. When a report fails, or you get that ticket that says the dashboard numbers look wrong, where do you even start looking? These accounts are your answer. Instead of digging through mountains of raw data, you can go straight to the CTA account to check for currency issues. Or you can go to the plug accounts to find those intercompany mismatches. These aren't just weird accounting things. They're basically built-in debugging tools for your data pipeline.
So the next time you're tasked with building a pipeline from a financial system, don't just ask, where's the data? Ask yourself, where does the system put the noise? Because by understanding the logic of these automated adjustments, you're not just a data mover anymore, you're a data validator. And you're ensuring that every insight your company relies on is built on a foundation of verifiable truth.